Ghana's latest gold mine revival could mark a turning point for a community long scarred by stoppages and uncertainty. In early November 2025, the mining firm Blue Gold Limited announced that it had secured a total of US $140 million to restart operations at the Bogoso-Prestea Gold Mine in Ghana's western region. But while the funding infusion is welcome, it comes against a backdrop of legal strife, community disruption, and a mining lease dispute still unresolved.
Heath Goldfields, operators of the Bogoso-Prestea mine, has blamed Blue Gold FGL, former operators of the mine, for leaving behind over $5 million mineral rights arrears. The managing director of Heath Goldfields, Patrick Appiah-Mensah, explained that this figure had accrued over the 8 years that Blue Gold FGR operated the mine. Patrick Mensah made this known while addressing the Prestea Valley MCE and chiefs from Western region who were on a familiarization visit to the mine. He assured the chiefs that although Heath Goldfields did not contribute to the debt, they are working hard to restart full production at the mine to be able to pay the mineral rights arrears to aid development in catchment communities.
I am aware that there is a significant amount of money left unpaid at the Minerals Commission in respect of the mineral rights. My numbers, I might be guessing, but I believe it's ranging between 5 to 7 million US dollars. That is left to be paid there at the Minerals Commission.
How do you intend to make this payment?
Okay, so we have had conversation with the government to structure a payment plan towards that. I was part of the conversations that we held towards acquiring the lease. So we've had that conversation with government already in a structured payment plan to be able to clear that.
Located in the municipality of Prestea Valley Municipal District, the Bogoso-Prestea mine has a storied history. The deposit is believed to hold about 5.1 million ounces of gold. For decades, the mine was a cornerstone of local employment and regional economic activity, but starting in recent years, it faced mounting challenges, equipment failures, unpaid obligations, and eventually, a termination of the mining lease by the Ghanaian government in 2024. Now the new $140 million commitment is billed as the financial lifeline that could bring the mine back into full production, provided the outstanding legal issues are resolved. The financing package is structured in two parts: a fresh institutional loan of $65 million plus a previously announced $75 million equity line of credit. Together, they bring the committed capital to the $140 million mark. The funds are currently held in escrow and are contingent on the resolution of the mining lease dispute with the Ghanaian government. In a press statement, Blue Gold's chief executive Andrew Cavagan said the funding clearly evidences our capacity to invest and restart the mine to bring it back into full production. From the government's side, the crux of the matter remains the terminated lease. As part of a broader clampdown on mining companies in 2024, Ghana's previous administration took the step of terminating the Bogoso-Prestea lease over alleged unpaid obligations. Blue Gold challenged the termination and moved the case into international arbitration. Though the funding is committed, the restart cannot proceed until a legally recognized path is cleared, either a settlement, renewed lease, or court decision. In other words, money in the bank, but legal access to the mine not yet granted. For the local community in the Prestea region, this announcement offers hope. When operations halted, many workers were laid off, local businesses suffered, and economic ripple effects were felt in surrounding towns and villages. The prospect of a mine restart means jobs, renewed investment, and a possible revival of infrastructure. Yet the community remembers previous disruptions and remains cautious. The stoppage at Bogoso-Prestea and associated problems stirred protests over unpaid wages and supplier debts in the past. At national level, the deal is being framed as an indicator of investor confidence returning to Ghana's gold sector. One mining analyst noted that securing $140 million in this context signals that global capital still sees the value of Ghanaian gold assets, despite the regulatory and political risks. Indeed, gold remains Ghana's largest export commodity, and mining contributes a large share of foreign exchange earnings and employment. Restarting a major site like Bogoso-Prestea therefore carries both economic and symbolic weight. Still, significant risks remain. The escrowed funds can only be drawn once the legal pathways are cleared. The lease dispute is not just a local matter, but part of a larger national conversation about how Ghana regulates mining, protects state interests, enforces obligations, and balances foreign investment. In that sense, Bogoso-Prestea is a test case. According to filings by Blue Gold, the company is also pursuing human rights claims and further judicial review steps alongside its arbitration case, though they say they prefer an amicable settlement with the government. On the technical front, the mine's restart will likely proceed in phases. First, a review of site infrastructure, heavy equipment recommissioning, safety and environmental compliance, then ramping up to production. Blue Gold describes an ambition not only to dig gold, but to tokenize its output. That is, tie mined gold to a digital asset as part of a broader corporate strategy. Whether that ambition will align smoothly with Ghana's regulatory regime remains to be seen. In the coming weeks, the key signs to watch include whether the Ghanaian government issues a fresh mining lease or resolves the existing dispute, when Blue Gold can draw on the escrow funds for site preparation, announcements of local hiring or community engagement programs, initial timelines for production restart, and gold output targets. For the communities around Bogoso and Prestea, this could mean a turning point. If the restart is successful, it may help restore local economies battered by years of interruption. For Ghana's mining sector at large, it represents a possible early signal of revival of large-scale project financing after a period of caution. For the government, it poses a challenge. Can the necessary legal, regulatory, and investment frameworks align to convert the funding promise into actual production? This story is still unfolding. With funding in place, the question now becomes, will all parties clear the path so that the mine actually restarts and delivers for workers, local communities, and the nation? As the funds for the Blue Gold Limited-backed restart of the Bogoso-Prestea Gold Mine in Ghana move closer to activation, several threads of the story are converging. Legal resolution, local impact, regulatory oversight, and the test of whether this ambitious revival can deliver. Legal and regulatory turning points. Central to the restart is the settled question of the mining lease. Blue Gold's announcement makes clear that the US $140 million in committed capital, which includes a new US $65 million loan, plus an earlier US $75 million equity line of credit, is held in escrow and cannot be drawn until the lease dispute with the government of Ghana is resolved. The dispute traces back to September 2024, when the previous Ghanaian administration terminated the lease for alleged unpaid obligations by the then operator. Blue Gold says it moved swiftly into international arbitration and is signaling readiness to drop litigation if a settlement is reached now. From the government side, key questions remain. Will it issue a new mining lease or restore the old one? Will it impose new conditions or require fresh commitments from Blue Gold? And what will the oversight framework look like, particularly in terms of local employment, environmental standards, and community obligations?
Calls for government intervention eventually led to the October 2024 takeover by Hit Goldfields, a Ghanaian-owned company tasked with revamping the mine. 10 months on, and with the recent visit by the Lands and Natural Resources Minister, I spoke with the management of Hit Goldfields to assess progress.
Since assuming operations, we have taken bold steps to lay the foundation for a safe and sustainable restart. Our key achievements include payment of over 100 million Ghana cedis in outstanding employee salaries and provident funds inherited from the previous leaseholder, investment of more than 34 million Ghana cedis in critical safety and infrastructure upgrades, including restoration of the mine's wonder to meet regulatory standards.
To verify these claims, I visited the street of Prestea to gauge resident views on Hit Goldfields' stewardship so far.
I think the coming of Hit Gold to Prestea is a blessing to the town. Why? Because, first of all, the workers, the old workers, they have been able to pay them their the amount they owe them. Somebody who hasn't started work but is able to pay the workers before even coming in. That was the first step. Number two, look at our surroundings. We started moving some things like weeding, making sure light, because there were no light. The light were cut off. But when they came, they have been able to restore the power for the company. Somebody who hasn't started the work, but doing all these things, I think they will do better.
The Minister, Lands and Natural Resources, Honorable Ama Kofi Bua, to ensure that disengaged workers receive every entitlement owed to them without further delay. We demand this end of contract benefits, outstanding leave arrears, the 2023 bonus, and redundancy pay due us to be paid immediately to alleviate our hardship. It has become increasingly clear that Heat Gold Fields cannot live up to their financial obligation. Under the lease acquisition, the time has come for them to step aside for a more financially capable operator to be brought on board to operate Bogoso-Prestea Mine. When FGR lease was terminated, government cited the company's lack of financial capacity and a key factor. Workers therefore expected that any new operator will be vetted thoroughly with transparent and verifiable proof of financial commitment. Now, ladies and gentlemen, the company's current effort is primarily directed towards the hauling and treatment of old tailings materials. While tailing processes can yield some short returns, it is not a sustainable strategy for a mine that requires long-term structural rehabilitation and production restart. If the objective was mainly to process tailings, the former operator could have done so without the leave being terminated. Bogoso-Prestea Mine deserve more than a stopgap resources or measures. It needs a complete operational turn around.
Economic and community stakes. For the local communities in the Prestea Huni Valley area and beyond, the announcement offers hope but also a cautionary note. The Bogoso-Prestea Mine has been a major employer and economic anchor. A successful restart could mean hundreds of jobs, renewed business for local suppliers, infrastructure upgrades, and general revival of the local economy. However, the history of disruption looms large. Unpaid wages, supplier defaults, the 2022 explosion in the region, and years of halted operations have left many residents skeptical. Blue Gold will need to show that this time the restart is sustainable, transparent, and aligned with community expectations. At the national level, Ghana's gold sector still drives a large portion of export earnings and foreign exchange inflows. A smooth restart of one of its formerly major mines could signal to investors that Ghana is open for serious large-scale mining investment again, if the regulatory, legal, and social environment is managed properly. Financial innovation and risks. Blue Gold is not coming in quietly. Alongside the restart plans, the company has publicized a strategy to tokenize gold output, meaning it intends to link mined gold from Bogoso-Prestea to a digital asset and possibly launch a gold-backed currency. This creates a novel axis of risk and opportunity. While financial innovation may attract capital, it places the mining operations under additional scrutiny, digital asset regulation, compliance, transparency, beyond the usual mining sector risks. From a risk perspective, The fact that funding is committed but not yet accessible means a delay or breakdown in the lease resolution would leave the operation stranded. Money locked, no production, continued local economic stagnation. Further, global gold price fluctuations, operational cost overruns, community unrest, environmental issues or government policy shifts all remain potential derailers. What to watch next? In the coming quarter, stakeholders will be watching several key signals, whether the Ghanaian government and Blue Gold sign a lease or settlement, clearing the legal obstacle. When Blue Gold begins to draw the escrowed funds and announce site preparation contracts, equipment mobilization and recruitment, the nature of community engagement, job offers, local supplier contracts, infrastructure commitments, environmental baseline studies, the first production targets, when the mine expects first gold pour and what scale of output is projected, how regulatory oversight is structured, will Ghana strengthen its monitoring of mining firms, obligations to workers, localities, environment, transparency, why this matters. The Bogoso-Prestea story is more than a single mine restart. It embodies broader themes, how Ghana balances its rich mining heritage and foreign investment with local accountability, how companies navigate legacy disputes and modern financial strategies, how communities long impacted by mining expect more than just one more investor, but meaningful and sustainable economic revival. For now, the US $140 million financing marks a significant milestone, but it is not the finish line. The key challenge lies in transforming that promise into action: legal clearance, operational mobilization, local impact, production delivery. For Ghana, the Bogoso-Prestea restart is an opportunity. For the company, a test of execution. For the community, a chance at revival. If you followed this story, we'd like to hear from you. What do you believe must happen for the Bogoso-Prestea restart to truly benefit the local community? Drop your thoughts in the comments below, hit the like button if you found this report helpful, and subscribe to the channel to stay updated on future developments.